Hey, what's up, everybody? It is Wednesday morning. Actually, it was a holiday this week. Wednesday morning, February 19th, 2020. Welcome back to today's edition of Stocks for Breakfast. Yes, spring training is starting here. Very excited. I don't know how the Mets are going to be this year, but I can't wait for baseball to start. We'll drive up Port St. Lucie to watch some spring training this year. I'm going to dive right into it. We have about 5 different stocks today, so I'm going to share the screen. Oh, by the way, if you like this video, make sure you scroll down, click to subscribe, and click the alert button so you get updates on when new videos come out. So we are going to jump into looking at the market first, actually. SPY is always what I start out with because I want to get a proxy for what happened yesterday. I'm going to look for relative strength, relative weakness in the market, whether or not there's still more room to go. What's interesting is roughly about a week ago, everybody was saying the market was overbought, which I guess it kind of still is. However, we're seeing 2 different things happen in the market right now, and they can be interpreted 2 different ways. Number one is we're starting to see a really solid pause up here, which would imply that the next move is actually going to be higher. But you always want to match a pause with volume. And we're actually starting to see increased volume during a pause, which is not healthy for a continuation. You always want to see lighter volume on a pause to expect the next move to go higher. Something else that we're seeing on the charts here that is not good for a continuation of the move to the upside is we're actually starting to see a lot more what I call melted candles. And melted candles are very easy to spot on the chart. If you read a recent blog post where I wrote the difference between energy candlesticks, which have large bodies, whether green or red, or indecision candles or melted candles, which means that the body of the candle, the open and the close, were relatively near each other. And that means there was indecision during that trading day. Now, this generally starts on the daily charts, and you'll see it start to manifest itself out onto the weekly and monthly charts. So this is something to pay attention to here today and going into the rest of the week, which is kind of a short week. As I just said, today's Wednesday already, even though it's the second broadcast of the week. You need to pay attention to how the market reacts after melted candles, because if we start to see some larger energy candlesticks to the downside that have a little bit higher volume, and we start to see lower lows and lower highs, so that's where we might start to see the market turn around. But what I want to point out here is one candlestick that's a bearish energy candlestick is not quite the same as when you start to get consecutive ones. Actually, like we had in Lyft yesterday. We mentioned Lyft in yesterday's video, and you can see that. I don't know why I have a sore voice today. Sorry about that. So anyway, we're going to get right into calling out some of the charts, and we're actually going to come back to the spider. So make sure you stay to the end of the video, because I'm going to compare how to day trade the spiders versus how you could have day traded another stock that we called out yesterday using just one simple price action, and it's a pretty significant one. All right, first we're going to get into, believe it or not, a lesson. Excuse me, my voice is shot. We're going to look at H&R Block. Now, a lot of people would normally be looking at H&R Block as a potential short sale coming into today, because a bearish breakdown rallying into a higher opening today, which would be into significant resistance. However, we don't really have good bearish order flow. The stock has really pretty much done nothing since September other than this recent breakdown, which happens to be happening right into tax season. So what do you think is going to happen to H&R Block during tax season? Something else to consider, though. What I really want to use this as a lesson for a couple of super cool trading patterns, if you want to call it. But it's really more about tape reading. It's really more about setting up good trades and paying attention to more than just blindly looking at the charts and saying it broke down, it's going into resistance, and I think I should short sell it. Which, by the way, that is the big difference between a chart reader and a tape reader, somebody who's struggling and somebody who's actually making money. When you start to put all the pieces together, it's like knowing the song versus just knowing a note. So what I want to point out here is we had a big breakdown in HRB. We broke down and immediately went into an inside candle. A breakdown into an inside candle is usually a false breakout. So just write that down. That's the first thing you want to pay attention to, whether it's a breakdown, a breakout and an inside candle, a breakdown and an inside candle. That is, generally speaking, a false breakout. I'm not necessarily saying trade it in the opposite direction, although you could if you're an aggressive trader who has discipline. But more importantly, we have what is another one of my favorite patterns or favorite tape reading distinctions that I like to make is we have an inside candle, a breakout, then a bullish engulfing candle, which usually represents some pretty solid volume. Then we have another inside candle again. So here's the point that I want to make. False breakdown, inside candle, and then another really big breakout. You can't ignore these consolidations that are now forming well-bid explosions. So I'm not going to be telling anybody to short this resistance because something has changed in the stock fundamentally. And I don't mean fundamentally by the earnings. I mean fundamentally by the fact that the tape has changed. So these little distinctions are really what make you a good trader, or it takes you from a break-even trader to somebody who really, really knows their stuff. So although there's not a trade here, I really wanted to point that out because as I was looking through the charts, I'm like, wow, that's a really good lesson I'd like to share with everybody. All right, next we're going to look at Shopify. What's really cool here is I'm going to use this as a trade setup as well as another lesson. Obviously, we had the gap up, good earnings last week. Stock might be a little bit expensive for some people to trade, whether you want to do with options or not. That's a whole separate business. We're talking about stocks here in Stocks for Breakfast. But what I want to point out here that I thought was interesting, I'm definitely looking to be long, but here's the question that I always get from everybody is, where is the profit target? How do I know exactly when I should be taking profits? The bottom line is look to see what the stock normally does. You don't need all this garbage that just confuses you. The last time the stock had a rally was here, and it was a clean rally, and we essentially went from 400 to roughly 480. So let's just use round numbers, 400 to 480. And then you can look over here and you see it went from 320 to 400. So the stock on average, when it has a bullish move in this current environment, moves $80. So when you're looking over here for your profit target and looking to get in, you should be setting those same expectations as far as where the stock can move. Now, what could be tricky and where people might drop the ball is they'll look over here and say, okay, it's $80 from let's just call it 536, which would make 616, right? No, that's not the price because you can't ignore this gap. This is actually where it started. So it's going to be $80 from roughly 470. And that's the spot you'd be looking for Shop to actually bump up and travel to. Next, I want to call out a stock that we looked at on the charts about probably about right around here in December. And I'll actually point out the exact spot in December. We'd actually noticed that as CRWD, CrowdStrike, was pushing down, double bottom, yeah, again, basic technical analysis that really won't get you anywhere. But when you learn to read the tape, you go from chart reader to trader, you start to notice a massive move here, which was basically the entire month of December where the stock didn't move. Now, remember what I just said before about the push up and a pause, and you want light volume on that pause to expect it to continue? Well, we actually got heavy volume at a pause near the lows here in CrowdStrike. And if you go back to the blog in December, we literally called this reversal as it was making new lows, specifically because of reading the tape. Now, bringing it up here is because I don't see anything that has changed for us to say the stock is going to pull back down to the downside. So we're looking for the stock to rally now between 66 and 82.50, which is the last place that it broke down and sold off from. Next, we're going to look at a short sale, just in case the market does turn around up here. Let me get rid of the volume here. You can actually see that Wayfair is at a very big multi-year support level. Now, very similar to what we looked at yesterday in Netflix, which I'm going to get back to, we'll touch on in a second. We want to see confirmation. We don't want to just short sell the breakdown because 1, 2, 3, 4, this is the 5th time it's gotten down to this level and has not broken through yet. So we reached out on a recent blog post as well about when to get involved in a new trade, when you should use a buy stop or a sell stop to get in immediately versus using waiting for it to close above that price level or below that price level before you initiate a new trade. Now, in this case, because it got there 5 times, I think it's going to break down, but let's let it close outside of that level before we look to initiate an entry, which brings me back to the Netflix trade from yesterday. That's the exact thing that we were looking at in Netflix yesterday, was waiting for it to burst through this resistance level and close there. Now, remember what I just said about a breakout and an inside candle. We want to make sure that today's not an inside candle for false breakout. So be patient, but keep this on your radar. There's multi-steps. And if you're struggling, most traders don't have those multi-steps. They just have, oh, it's a breakout, or, oh, it's a flag, or, oh, dig a little deeper. And again, I talk about this all the time. Think about it as if you were driving on a car. You're not just looking at the front of your hood and ignoring everything else. The more distinctions you could make as a trader, the better trader you will be. Because in my terminology, the way I talk about it in my program, in the order flow coaching program, is you need to build an argument for accepting risk. And the better the argument, because you put more stuff into the trade idea, the better the quality of your idea, and you'll start to trade with more conviction. That's a key distinction there. All right, so same thing with Netflix. We just discussed that. Twitter, I want to call out again another trade from last week, which is a very big reason you should keep going back to the blog and looking at previous trades. We called Twitter on this pullback over here in the 36 area, looking for it to rally. Actually got up and hit the target. We're going to start hitting the target again. It's not a new trade here because it had a good bullish day, not a lot of room to the next level. If you happen to be long already and it's a short 1 to 3 day trade, you can be looking to scale some profits or maybe even take some profits off at 39. If you're not looking for it to be a shorter term swing trade, I'd be looking for it to pause up in this 39 area and then ultimately retest this $45 high up there. Now, the one thing I want to talk about to end the video right now is this less of a stocks for breakfast is going to discuss a little bit of day trading. A lot of people watch and send me emails. They're not day traders, they're swing traders, which is why we always start on that higher time frame. But I want to point out something that makes day trading infinitely easier. If you understand order flow, or you've been following the blog or watched some of the older videos, you know that order flow is when buying or selling pressure by the smart money, which is why our daily e-letter is smart money alerts. When it's obvious, those are the trades that you should be taking. But there's another way to read order flow intraday, and that will make a trade higher probability. I don't want to use the word safer. That's not the word. I want to use a better trading idea. Getting back to what I just said before about the quality of the idea. So we're gonna compare the SPY from yesterday with our NVIDIA call from yesterday, which by the way exploded. I hope everybody got a piece of that. So first, we're going to take a quick look at the SPY on the 5-minute chart. So obviously on a longer time frame, it has massive bullish order flow. But here's what I want to point out. Here's the opening price in the SPY. And the opening price represents today's order flow. There's that opening print, and then what happens after that. Do institutions support that opening print above or below the first trade of the day? Now, if you know tape reading, if you follow the blog, you follow the letters, tape reading is price moving closer to or further away from the most recent price. So usually when you're in a trade, that's how you read the tape. I'm long the stock, or I sold the stock and it's moving up or it's moving down, and you could read the tape better than anybody on the planet because you have a position that's making your heart go up and down, right? So the goal for tape reading is how do you do that before you get into a position? And that's what I'm going to show you right now. So day trading the SPY, we know coming into the day, bullish order flow, looking for longs. But look at what's going on here. Within that first, let's say this is around 10:30, within the first hour of the day, the price was above the opening price. So the last price was above opening price, and you could look for longs confidently. We just didn't get followed through. Now, Apple yesterday with coronavirus, a lot of selling pressure on the market, right? The rest of the day, up until this point here, where we got back above the opening price, which was in the afternoon, the rest of this was mediocre longs. So that's what I want to get across is there's your A+ trade, and then there's everything else. So you have to make a decision during the day. It's not the market giving you money, it's you making better decisions. So if you have a choice between a bullish stock that is below the opening price, which means today's prices are not being confirmed by today's buying, versus, we're going to get to this stock in NVIDIA, which we called out yesterday. The NVIDIA opening price is all the way down here. So for the entire day, NVIDIA was above the opening price, which for yesterday, in this example, in this trade setup that you should probably print out, yesterday NVIDIA was a much better argument for getting long. And you can see the follow through that we got from low to high, 285 to 297, a really, really good push off of a good daily setup. If you missed yesterday's setup, go back to yesterday's video, yesterday's stocks for breakfast, and see exactly how we called it. So that's two examples of day trading. Which one might be a better argument? In my opinion, I think we just made a pretty good argument for how to make a good argument. Go back to the beginning if that was new, what I taught you in reference to watching that HRB trade and learning how to read the tape, the breakdown, the false breakdown, the inside candlesticks leading to well bid, leading to an explosion where we had a good, solid energy candlestick. So this is Pete Renzulli signing off for today's Stocks for Breakfast. Hope this helped. Give us a thumbs up if you like it. Make sure you subscribe. And if you have any questions, shoot me an email. Have a great day, everybody.